Hey everyone, welcome to another episode of Investing Kev. In today's episode, we're going to take a look at China in review for the month of August. This video could have came out much earlier, but I had to wait for a few companies to release their earnings, which came out and they are included in this video. We'll take a look at summaries of a few Chinese companies and the recent earnings report, and major Chinese news that definitely have an impact on Chinese stocks. Whenever there's going to be a lot of Chinese stocks out there having their earnings report release, I'll do a monthly roundup video. I just don't have time to do weekly or as much individual earnings report videos as I used to, but if you like this format, let me know in the comments and I'll keep it up. If you like my content, please give me a thumbs up, subscribe, and let me know in the comments what you think. As always, this is for entertainment purposes only. Always do your due diligence and speak with a professional advisor. Alright everyone, let's get started. The first two stocks we're taking a look at are two of the biggest e-commerce companies in China, Alibaba and JD. Let's take a look at what Alibaba, ticker BABA, had for the second quarter. Their revenues were at $30.6 billion US, which was flat year on year. They say this was due to COVID-19 lockdowns, which resulted in a sluggish economy. Back in June, Alibaba started trading on the Hong Kong exchange. This is greater access to capital, especially from citizens who use the company consistently. And Alibaba has also been trying to expand revenue and users for its discounting platform called Taobao Deals and grocery and fresh food service Tao Chai Chai. The Hangzhou headquartered company sees the newer businesses as a way to attract less affluent customers in smaller Chinese cities. Looking at JD.com, ticker JD, their net revenues were at $40 billion US, which is a 5% increase year on year. They had robust cash flow generation. They had outstanding cash conversion cycle, resulting in operating cash flows greater than net profits. They were boosted by their annual 618 shopping festival in June. Their annual active customer accounts increased 9.2% to 580.8 million users, and they have a continued emphasis on financial discipline and operational efficiency. Their JD Plus memberships, which are the first paid membership programs in China's e-commerce industry, exceeded 30 million registered members. These members are among JD.com's most active and loyal users with strong consumption power. The next two stocks are two major Chinese companies. Pinduoduo, ticker PDD, saw total net revenues of 31.4 billion renminbi. This is about $4.7 billion US, which is a 36% year-over-year growth. Their operating profits were 8.6 billion renminbi. This is 335% year-over-year growth. They saw a recovery in consumer sentiment in Q2, especially during the 618 shopping festival back in June, and they continue to invest in areas such as agriculture and R&D to better serve customers. They're currently focusing on the rural economy by starting a new craftsman's program. They aim to help local artisans and craftsmen promote traditional crops, build their brands, and widen access to the markets. The next stock is Tencent, ticker TCEHY. They saw total revenues of $20 billion US, which is a decrease of 3% year over year. During the second quarter, Tencent actively exited non-core businesses, tightened market spending, and trimmed operating expenses in being a more financially managed company. Their online advertising revenue dropped down 18% year over year. When the economy is shaky, online advertising revenues usually always drop. Tencent is confident in growth in fintech and business services and online advertising when China's economy expands, and their domestic games continue to take a hit with fewer big game releases, lower user spending, and measures to protect minors. The next two stocks are Futu Holdings and Baidu. Futu, ticker FUTU, had total revenues of 1.7 billion Hong Kong dollars. This is roughly $222.6 million US. This was a 10.8% year-over-year increase. Their total number of paying clients increased 38.6% year-over-year to 1.38 million clients. In Q2, they added 60,000 users. Their total registered users increased 30.5% year-over-year to 3.02 million clients. Their total client assets declined 13.8% year-over-year to 433.6 billion Hong Kong dollars. They said that weak equities market performance dragged client growth, and they repurchased 6.5 million American depository shares with approximately $200 million total repurchased. This is about 40% of their maximum purchase of $500 million US. Looking at Baidu, they had revenues of 29.6 billion renminbi. This is about $4.4 billion US. This was a decrease of 5% year over year, but an increase of 4% quarter over quarter. This was due to COVID-19 outbreaks. Their Baidu Artificial Intelligence Cloud grew 31% year over year and 10% quarter over quarter. Apollo Go continues to grow as the world's largest autonomous ride-hailing provider. They completed 287,000 rides in Q2 and accumulated 1 million rides on July 20th. They unveiled their 6th generation robotaxis. RT6 is the first steering wheel-free, all-electric vehicle designed for fully autonomous driving. And Baidu's app monthly active users reached 628 million people. This is an 8% increase year over year. In iQIYI, revenues were down 13% year over year. They had daily subscribers of 98 million in Q2. This was down from 99 million people last year. The next two stocks are NetEase and Li Auto. NetEase, ticker NTES, is a huge gaming company in China. Their revenues were renminbi 23.2 billion, which is about $3.5 billion US. This is a 12.8% year-over-year growth. Their gaming and cloud music revenues increased. Their Youdao, which is their search engine, revenues decreased. During the second quarter, they released Naraka Blade Point and Harry Potter Magic Awakened. and they have a new gaming studio, Jar Sparks, which is going to be headquartered in Seattle. This is going to be led by Jerry Hook, the former head of design on Halo Infinite. With Jar Sparks, they have a full creative control building out a new universe focusing on the next generation of gaming. Feel free to check out my video on NetEase, which came out a few weeks ago about the most recent earnings report. Looking at Li Auto, ticker LI, their vehicle sales were at $1.27 billion in the second quarter. This is a 73% year-over-year increase, and they are down 8.9% from Q1 in 2022. They unveiled their Li L9 end of June, which currently has about 30,000 pre-orders. Their deliveries of vehicles in the third quarter are expected to be about 27,000 to 29,000. This is an increase of 7.5 to 15.5% from third quarter 2021. Their revenues are expected to be about $1.34 billion US dollars. This would be a 15.3% increase from third quarter 2021. And their new energy passenger vehicles surpassed 1.17 million in second quarter, more than 2 times year over year. Orders for their flagship SUV, the Li 1, are slowing down. Customers are focused on the Li L9, which is possible cannibalization of the vehicles. Li Auto stated that they're going to focus on continued promotion of the Li 1. The final two stocks are Tencent Music and Huya. I want to take a look at Tencent Music, ticker TME's second quarter. They had total revenues of RMB 6.9 billion. This is a decrease of 13.8% year over year. They attributed this to decreased advertisement revenues, restructuring certain music labels, and uncertain headwinds and competition. Their revenues from subscriptions were at 2.1 billion renminbi. This was a 17.6% year-over-year increase, and their paying users reached 82.7 million. This was an increase of 25% year-over-year. They are currently focused on cost optimization and operating efficiency. And at the end of Q2, $700 million US dollars of a $1 billion US dollar share repurchase program was completed. Management stated their confidence in the future of Tencent Music. Looking at Huya, ticker HUYA, they had Q2 revenues of 2.3 billion renminbi. They had a rocky Q2 due to turbulence in macro and regulatory environments. They had regulations for tipping behavior and protection for minors, which definitely impacted their revenues. They had lower live streaming revenues and advertisement revenues. Their mobile monthly active users reached 83.6 million. This represents a 7.7% year-over-year growth, and management wants to further strengthen monetization capabilities to improve cost and expense structures and solidify business fundamentals. I want to take a look at a few news articles that came out this past month related to China and how these events can definitely impact Chinese stocks. The biggest news in all of August is that China and the US has finally reached an agreement on auditing Chinese firms. The auditing of these firms is supposed to be consistent with US standards. This also clears up the fear about delisting Chinese stocks. I want to read a few snippets from this news article. US officials struck a cautious note, warning it was just a first step and that their view on China's compliance would be determined by whether they are able to conduct their inspections unobstructed as the deal promises. The deal appears to give the PCAOB what it has long demanded, namely full access to Chinese audit working papers with no redactions, the right to take testimony from audit company staff in China, and sole discretion to select which companies it inspects. So just to make sure that we're on the same page, things are not fully finished. Chinese companies will be audited and be made sure that they are compliant, which will start in mid-September. If these companies aren't compliant, that'll be on them. But I believe that most of these companies will be compliant. I have said this numerous times that these countries are intertwined. Wall Street wants access to the Chinese markets, and Chinese companies need the capital to grow. But this is exciting news as it's been a long, painful process, but this removes a huge hurdle. The second article is about algorithm sharing of major tech companies with the Chinese Cybersecurity Committee. This is an unprecedented thing and goes back to the government making sure personal data and privacy is upheld. I will say again that China issuing a tech crackdown last year was the best thing that happened. All companies knew at the same time and were given the rules to be compliant around the same time. Everyone's on the same page and that's good for the future. Here's some snippets about the algorithm sharing article from CNBC. Algorithms are the secret sauce behind the success of many China technology companies. They can be used to target users with products or videos based on information about that customer. China's move to create a registration system for algorithms is unprecedented. The US and European Union have yet to introduce anything like the law seen in China, although European lawmakers are currently debating rules around the use of artificial intelligence. The next news article is about cost cutting. Once high-flying Chinese tech giants are now looking to scale back costs. Alibaba and Tencent executives have been focusing on cutting costs across the business from headcount to exiting non-core businesses. Alibaba will continue to focus on areas with long-term potential such as cloud computing and overseas e-commerce. As the news of a potential global recession and things slowing down in China due to numerous factors grows, these companies are scaling back costs and trying to be as financially responsible as possible. They're laying off staff, getting out of businesses that they don't believe will contribute financially to their long-term success, and it'll be interesting how things go. A few of these companies rely on advertisement revenues, and during downturns, a lot of these advertisement revenues drop as companies don't find great value in spending more for ads knowing that their conversion or hit rate of these ads will be high. The next news article is related to a housing crisis and potential huge bubble that's about to pop. China plans $29 billion in special loans to troubled developers. These loans are to be used for completing sold but unfinished properties. The PBOC and Finance Ministry to channel money via policy banks. This would make it the biggest financial commitment yet from Beijing to contain a property crisis that's seen home prices slump and real estate sales plummet. They are urged to boost overall lending to support the nation's flagging economy. Chinese banks cut their benchmark lending rates for a second time since May 20th. That came after the central bank last week unexpectedly lowered its key policy rate to support growth. So right now the Chinese government has been proactive trying to make sure that the housing crisis doesn't blow up. They're also pushing for growth as they reduced interest rates. In the US, the Fed is currently increasing interest rates while in China they are reducing interest rates. And the final biggest news event is Taiwan. Back in early August, Nancy Pelosi visited Taiwan despite China's warnings. Biden told Xi Jinping that the U.S. policy on Taiwan had not changed and that Washington strongly opposes unilateral efforts to change the status quo or undermine peace and stability across the Taiwan Strait. China views visits by U.S. officials to Taiwan as sending an encouraging signal to the pro-independence camp in the island. Washington does not have official diplomatic ties with Taiwan, but is bound by U.S. law to provide the island with the means to defend itself. China has stressed numerous times about peaceful reunification, but has stated that anyone trying to undermine the process will face retaliation. It is in the best interest for everyone that China and Taiwan never go to war. This is because blockades would happen, economies will take a hit, and if the US is supplying weapons to Taiwan or involved in this thing, things can definitely further escalate. It's interesting how Biden states that the US stands with a one China policy, which is accepted by pretty much the entire world. Yet politicians try to play with fire by visiting Taiwan against what China warns against. There's a lot of provocation from the United States and it needs to stop in my opinion. Overall, this will not be good for anyone. Alright everyone, I hope this China August summary was helpful. If you like this kind of video content, please leave a comment below. If you like this video, please give it a thumbs up, subscribe, and let me know in the comments. Alright everyone, that's it for now. As always, thank you for tuning in, stay safe, and I'll see you all next time.